What's up, ladies and gentlemen? It's your professor once again here to give you guys a live trading market update, going over things, what we did, how we did it, why we did it, and also give you a little bit about a prediction about the stock market moving forward. Now, today's key focus on this overall topic is going to be how to be a consistent trader. Now, this is probably one of the hardest things for people to do because some people have, days where they're killing it, they're on fire, and following days they burn it all and they lose it. Okay, so this week I already told my team right off the bat it's going to be a tough week, and you want to take your consistent profits, build that snowball, so that way you can eventually play with profits on when you see the opportunity such as news and so forth that arises. Okay, so the way we're going to go over consistency first is basically discuss the habits that I do on a continuous basis when you are in my mentorship room. So I do my homework on a daily basis and on a weekly basis to make sure that my members know what's happening, what my projections are, and so forth. Okay, so basically, we started off this Sunday, Saturday. I was doing my research this week in our market sentiment report. This was given. So for everyone that is listening to this, I'd love to share insights of my model and so forth. We knew right away that the most important earnings had to do with the cybersecurity stocks, the tech giants such as Salesforce and Snowflake. These earnings in these particular stocks can affect the entire industry. So cybersecurity and tech giants were primarily on our radar. And because there's cloud stocks reporting such as Salesforce, Snowflake, that can move other stocks like MDB and so forth as well. So rule number one to being a consistent trader is you got to put in the work and you have to do your homework so you know what's happening in terms of the earnings and economics as well. We know that Powell was speaking on Friday and we got the core PCE as well. So my numbers are given. I'm going to keep that to myself, but our prediction was that it's going to be a chop week, and we basically see that the market range is going to be 4520 to 4600, basically within an 80-point range. There is a possibility, of course, that we can see that SPX move outside those bounds, but when they do move outside those ranges, then we know which direction the market lies on. It's all about timing as well and seeing what the pricing on the premiums are. Okay, I also predicted that the chop range on SPX would be between 45 42 and 45 sorry, that's meant to be 4550 area. So you can pretty much 4500 to around 4542 area is going to be the chop area, and our estimated weekly low is 4520. Okay, so we got that right off the bat and we knew it was going to be chopped. So what did we trade today? Interesting question. So we swung basically our Eli Lilly calls right over here. So if we go into that, we basically can see that we had the Eli Lilly. So right off the bat, because this position was a little bit oversized and there was a news, I seen weakness in it, I had to sell this right away. It was up, there was a quick pop. We took it. People on Voice knew about it as well, have every opportunity to take it. I was waiting for some sort of drug news, but it's hard for the stock to break out. So we swung this, made a quick 30%, and not looking back, whatever. So we did place an order to buy NVIDIA. We noticed NVIDIA was strong, and we had SPX 4180 calls for tomorrow. Okay, so let's go over why I got this in the first place. Okay, now this is part of the reason of why I'm a consistent trader. First of all, okay, so basically I have a checklist that I use here to really confirm if we're in a bullish or bearish market. Okay, so the checklist, it all comes down to the numbers in my model that I hit. So we got to make sure we basically what inflection points are hit, what stocks are hitting my key inflection points based on my watch list. Now, I got into the SPX call because SMCI and LRCX were looking like the main stocks that were hitting that inflection point. Now, this is only one condition out of all of these four conditions that were here, right? So, sorry, three conditions that were here. So I added an extra day because I knew that SPX was going to be chopped, and this was somewhere out of the money. The premiums were pretty cheap near the low of the day price. So I got SPX because these two stocks, my assumption was that if one semiconductor or major risky tech hits an inflection point, then it's possible that other semiconductors are likely to pick up. So that was the objective. And I noticed that the premiums were cheap, but the goal was to sell it fast and sell it when we had an opportunity to. So there was two opportunities that you would have been able to take. So we use this checklist to make sure we know which side the market sentiment is on. And this helps us avoid bias. And this is what keeps us as a consistent trader. So if you guys like this, then definitely our room is where to be to get that information. Okay. So we got the SPX call, and we also had shop calls as well. This reason for shop had to do with news. If you guys follow my Twitter, I even mentioned that right at the open, talked to my team, told them that shop looks very bullish. We sold those because the market was choppy. So we pretty much emptied the bag. Now, the only thing that we're swinging here is ZS. We got the ZS 175 puts. Simple reason here, Pan W and most cybersecurity stocks, most stocks on earnings have been really selling off lately. And that could possibly be because of the overall guidance plus the prices already baked in, right? So ZS is down almost 7% pre-market. We're basically very close to the money. So that was a earnings lotto winner. Let's see if it pretty much can hold. But the key thing here is that to be a consistent trader, you must let me recap this again. You must do your homework, to have a checklist based on your edge, right? A lot of people have their own unique way of things they look for in order to understand the overall market. I have my way, and my way has been working for me and my team. So I basically check off these things here to see, okay, based on the overall picture here on my model, is a market bullish or bearish? And having this checklist will definitely generate you greater returns, add more consistency, and make you follow your process. This is streamlining your process, and this helps you avoid the psychological issues of always just chasing candlesticks, because you got to make sure you listen to your model. And you got to make sure you have your edge. If you don't have an edge or whatever, I'm your mentor to be. I can definitely show you how that looks. Okay. So now that we're only swinging ZS, here is what I see on SPX. So SPX, our weekly estimated low is at 45.20. Now, I believe that 45.20 might be the first inflection point that we hit. The premiums are looking very cheap on both ends of the spectrum here. So we are likely to chop here. But if we hit 45.20 on lower yields, I will definitely consider adding calls at that specific point back to the upside. Now, if we see 45.72, then that's where you want to watch out that 4,600 is likely to happen. So there's a lot of chop in the market, and we have some news with core PCE and so forth. Okay, so the strategy right now that I'm employing is find a sweet spot for these option premiums, wait, and then when we have that nice entry, we sell it for between 50 to 100% is our key target where we're looking for. Okay, if you guys see over here, there's a lot of evidence that I wait for the opportunities. Like I placed an order to buy NVIDIA, 490 calls at 1.5. They were at 4. We waited. It didn't fill. That's okay. We didn't chase it because the opportunity there wasn't so great. We also placed an order on LRCX 740 calls at 2.5. These would have had filled at the end of the day, where I told my team, but I decided not to purchase it because I canceled it right at 3 o'clock, but they would have filled. So key thing here is if you see that the market is very all over the place, choppy, let that opportunity come to you at a price that is at a massive discount, because you want to make sure that when you swing a play, that you factor in that there's going to be a loss a day, and you want to make sure the probability is in your favor. Okay, so that's goal number 3, is make sure you enter a play that has a probability in your favor. And the way that you do that is pretty much by waiting, analyze the premiums, look at your charts, look at your indicators, and find if that works for you. So 3 ways to be consistent. Number 1, do your homework. Number 2, have a checklist in terms of what are your overall edges. Have a conditions on when you enter trades, when you exit trades. So I have my checklist that I use for my members. And if you need help building that, reach out to me. Let's discuss, and I'll definitely implement that plan for you. And number 3, finally, is wait for premiums to be at a discount. Okay, so I give my market prediction, market details, and based on that, we had 3 trades, all green, and where it looks like we're earning into a earnings lotto winner, and we have that with profits. So nice day so far. We're going to keep the ball rolling here. Make sure that we educate and we give you guys updates on a daily basis on what we're doing, how we're doing it, so that way you guys can see the edge moving forward. So thanks for tuning in. See you guys in the next market recap, and let's get that money.